Hi everybody. There was a massive sell down in late July on the Hong Kong China tech stocks as the China government started to clamp down on some of the tech related companies. And certain prominent companies like Meituan, Alibaba, JD.com, Tencent, they have dropped double digit in 1 to 2 days time. This resulted in massive panic selling of all these stocks. Okay. However, when you look at it, whenever there's a crisis, there's also opportunity. So the question is, which are the stocks that we feel that they will recover from the crisis? Okay, that would require certain analysis to do it. And also the second thing is, when you want to invest in Hong Kong stocks, the minimum capital investment amount will be much bigger compared to invest in Singapore stocks. Okay, and thus for certain retail investor, the capital outlay will be a bit too much in terms of the weightage of the portfolio. Okay, so what's the better way to go around it? If you can invest in the Hang Seng Tech Index ETF. Okay, so before I talk about Hang Seng Tech Index, let's understand what is Hang Seng Tech Index. Okay, Hang Seng Tech Index actually is an index that represents 30 largest technology companies listed in Hong Kong that have high business exposure to technology teams and pass the index screening criteria. Okay, do take note the keyword for this is this technology company have to be listed in Hong Kong. Okay, so you definitely excluded tech company that only listed in US but they are China-based company. Okay, so this is something you need to think on that. Okay, we can look at this chart. You can see that the index also is not spared. Okay, as most of the heavyweight tech stocks have fallen, so the index actually start to fall from actually mid of February from a high of 11,000 to currently less than 7,000, which actually more than 30% drop. Okay, and what is so unique about this index is, do take note, this index is only launched in 27 July 2020. That means this index is only 1 year old. Okay, it is actually a new index that's created by the Hang Seng indexes. The performance of this Hang Seng Tech, okay, is the long-term performance is so much better than the Hang Seng Index. Okay, however, do take note that the volatility of this index is also much higher. Actually, in fact, I can say that the volatility for this index actually is double of the Hang Seng Index. So indirectly means that you are getting high risk to have a potential of high returns. Okay. Another thing unique about this index cap every individual stocks at 8%. Okay, so regardless of how big the market cap of that counter is, they will only able to maximum take up 8% of the holding in the index. And from the chart, from this table, you can also see that most of the stocks are actually under the IT sector. Okay, under the information sector. Okay, 70% are weighted on the IT side. And what are these 30 stocks? This is just a view of these 30 stocks as of 30th of June. So the counter that are on the main list are the Meituan, Baba, Sunny Optics, Tencent, and the Xiaomi. So these are the top 5. Okay, counter that are close to the 8 or slightly above 8% weightage. And do take note, this index will auto rebalance every quarter. Okay, to make it so that means that those stocks that cross the 8%, the index may actually trim that to 8% every quarter. So the rebalancing will be on March, June, September, and December. So this will be, they do a quarterly rebalancing index. But however, as an investor, we are not able to invest in the index. Okay, that's why we cannot invest in STI index. We cannot invest in S&P 500 index. So what's the way that we can invest in that? We need to invest in the ETF that benchmark this Hang Seng Tech Index. Okay, and so and actually there are several ETF available in the market that benchmark Hang Seng Tech Index that you can invest in. Okay, however, before we talk about the ETF, I just want to bring to your attention on this thing called SIP and EIP. Okay, what is SIP? SIP is called specific investment product. So that if you want to buy this ETF that is classified under SIP, you need to have certain investment knowledge. You need to pass an assessment. Okay, and what about EIP? EIP is called exempted investment product. So EIP means that you do not need to have any investment knowledge. You can straight just buy this ETF as long as you have the stockbroking account. So this is a difference between an SIP and EIP. Okay, and actually in the past when MS started that itself, all the unit trusts, all the ETF are all classified under the SIP. Okay, but MAS has started to change the rule, amend the definition of EIP, and thus more and more ETF have been shifted to the EIP side. So let's look at what are the Hang Seng Tech Index ETF that you can look at. So at this graph you can see that actually there is only 5. Okay, practically there's 5 ETF, and 4 of them are listed in Hong Kong, and 1 is listed in Singapore. Okay, and of these 5 of them, 3 of them have 2 currency. Okay, 2 of them is Hong Kong dollars or US dollar, and the one listed in Singapore one is either Singapore dollar and US dollar. So this is all the many 5 of them, and of course the one that have the biggest AUM will be this CSOP, Hang Seng Tech Index, followed by the iShares with 8.4 billion Hong Kong dollars. Okay, the one that listed in Singapore is the line OCBC Securities, which is about 1.5 billion in Hong Kong dollars basis. Okay, and when you look at this index itself, you can see that only the CSOP and the iShares and the Lion OCBC are under the EIP category. Okay, means that when you have a brokerage account, you can just buy them directly. But for the other 2, like the Hang Seng Tech Index and the ChinaAMC Hang Seng Tech Index, they are classified under the SIP. Means that if you do not pass the investment assessment, you are not allowed to buy. Okay, so this is a difference in this. Okay, and we know that for foreign shares, right, we can only use cash to buy. Okay, but if you want to buy the Hang Seng Tech Index using an SIS money, then you can only look at Lion OCBC Securities Hang Seng Tech Index that is listed on HKEX, which is SRS approved. Okay, so which SRS approved. So this is something that you need to think of that. Okay, I just want to highlight to everyone that EIP doesn't mean it's lower risk than SIP. Okay, so a lot of people have the conception, oh, this is EIP, exempted investment product. I can invest it because it is low risk. Okay, all investment products are not low risk, but especially stock related, they are considered high risk. Okay, so and EIP in ETF can be very high risk also. Okay, and an SIP product can be even lower risk than buying stocks. Okay, so please don't get the misconception of EIP equal to low risk, SIP equal to high risk. It don't work that way. Okay, it's just based on the mechanism under the MS definition. Okay, but it doesn't mean SIP is default high risk. So this is something you need to take note on that. Okay, so by looking at that, which one should you invest in? Okay, if you are Singaporean and you want to invest using an SIS account on the Hang Seng Tech, I think there is only one choice, which is only the Lion OCBC Hang Seng Tech Index you can invest in. Okay, but if you don't want to pass any investment assessment, okay, just want to buy immediately, then there's only CSOP and iShares. Okay, looking at the expense ratio or the management fee, we have noticed that actually the iShares have the lowest. So definitely makes sense, of course, to you want to buy a ETF, okay, which is just passively track the Hang Seng Index. Of course, you want to go for a lower cost ETF, and iShares happen to be the lowest cost. Okay, lowest cost, and CSOP although have the highest AUM, but they are the most expensive. But I've observed over the year, as to take note, all these ETF, the most is only 1 year old. That means they are pretty new to the market. So when the AUM start to build up, like for example, I noticed for CSOP, that actually the expense ratio have started to drop along the way because their AUM have been picking up. Okay, so initially I think in the past it can even go to 1.4, 1.3. Now it starts to drop to 1.2. And every month I look at it, actually I feel that actually it starts to drop further and further. Okay, so this is something you just need to take note. Okay, do take note iShares is under BlackRock, which is a US firm, while CSOP is actually China Hong Kong firm. Okay, so one is in US, one is Asia. So you want to, I just want to share you what actually happened in the past 6 months. Okay, on iShares Hang Seng Tech ETF. Okay, and this is what happened actually in early this year, January, okay, and February during the Trump administration's side. Okay, they start to impose sanction on China company. The ex-president of US started to impose, and because BlackRock is a US company, so they have to follow the orders. So they follow the order. What that means? They mean this, although it's an ETF, ETF is supposed to be neutral. They're supposed to follow index, but because of the order issued by the president, okay, they have to stop buying certain counter that fall under the blacklist of US government. These two companies, one is called Xiaomi and the other one called SMIC. So this resulted in this ETF performance will definitely not be synced with the Hang Seng Tech Index. Will not sync with the other 4 ETF, as they are not going to invest further on Xiaomi and they're not going to invest further on SMIC. So they can only just maintain the holding. Okay, so this is what actually happened. But fast forward, okay, so this is the letter that, so from 1st February onward they actually have stopped investing in these two companies. But when it comes to May, when Xiaomi actually being removed from the list, then they start to reinvest in Xiaomi already. SMIC was only being put back in 2nd of August until the current president, Biden, okay, have started to pass a new order, say that this ETF, as long as it's a foreign asset, that means non-US citizen invest in this, okay, it is okay, even if it's the US sanctioned company. Okay, so thus SMIC have been put back, okay, into this ETF again from 2nd of August. Okay, so within this 6-month period, actually you can see there may be some performance difference. They may have slight perform different, okay, or tracking different compared to the index. Okay, and of course we hope that going forward this thing will not reoccur again. Okay, and so this is something you need to think of when you want to invest in iShares. Hang Seng Tech ETF. This is just to show you what actually have happened, okay, in the past 6 months. Okay, let's look at the performance. Okay, you can see that practically all the 5 ETF, the 4 listed in Hong Kong, 1 listed in Singapore, all the performance have been pretty consistent. Okay, you can although the timeline is a bit too short, but you can see practically there is a bit is pretty consistent. Okay, the direction it moved is the same. And let's look at the drop from the February high to the current low. This is about 30%. Okay, so the Hang Seng Tech Index actually have dropped about 30% as of now. And this is what you can see. This is the performance going forward. So which one should you invest in? That will depend on what are you looking at. Okay, if you are investing in SRS money, then there's only one option, which is the Lion OCBC Securities Hang Seng Tech Index. Okay, and if you are want more options, then you may want to consider CSOP or even iShares. Okay, iShares we have the lowest cost, and let's say that you can invest in SIP product, then there's other 2 alternatives you can choose on. So there is no right or wrong on which ETF you want to invest in. Okay, it's all boils out to your own personal preference. And that's all I have to share today. If you feel that you have benefit from this video, remember to like and share and leave your comment below. Okay. Also do remember to subscribe and press the bell button so that you'll be notified for our next video. So I shall see you in my next video. Bye bye.